In today's video, I'll share a bearish trade idea inside of T-Mobile. I'll talk about ways to play this for both day traders along with swing traders. Now let's first talk about the setup. T-Mobile's trend just turned bearish today with the market pulse indicator, and that's what caught my attention. You'll see the label in the top left now says deceleration, and that's because the market pulse went from the stage of acceleration when it was green all the way up from September of 2023 to finally going bearish with today's closing candle. Now so far it looks like there's a lot of chop here. So this is our first clue that we're looking for this overall trend, this chop, to start to drift more towards the bearish side. Now another clue that stands out is the smarter MACD right down here, in which you can see that bearish switch took place earlier this year, even before earnings kicked in. This is analyzing the weekly MACD, so now we have a few different time frames putting together higher time frame analysis and our current time frames market pulse trend. Now if we load in the momentum cross here to see if there's been any clues of the 3 EMA crossing below the 8 EMA, we can see that that has also happened earlier on this year back in January. Now we're looking for this momentum to actually start to kick into full gear on the bearish side. Now that's where my overall thesis for this idea stems in. Now let me share ways that I think you can play this for both day and swing trading methods. Using swing trading, if we come into the options chain, there's two different strikes that stand out on the put side. The first is the at the money put with 29 days to expiration. This is the 15th March series. And there, the at the money put has not only the most open interest, but also the most volume today, and it seems to be a strike that's liquid enough to try and play this overall move, where you're at the money, you're not really looking for a whole lot, just looking for that momentum to kick into the negative side. Now, if I give you an idea of what you might be expecting, you can see what's happened every single time that trend has shifted bearishly. Sometimes we've seen larger shifts, sometimes we've seen smaller shifts, but we have seen small thrusts to the downside, and that's what I'm looking to take advantage of with the puts, that burst in volatility. Now another expiration outside of the 29 days is the 64, which stands out, and there the out of the money strike, where this is the 140 strike with nearly 4,000 in open interest, that strike stands out as well for those of you looking for out of the money options. Now I would very much consider these 140s as that lottery type pick, but you'll also notice the pricing is similar to the lottery type pick. Just about 30 bucks compared to the at the monies, which are going for closer to 200 bucks. So for swing traders, I think those puts are ways to try and play this overall idea to the downside where your risk is still defined. Now for those of you that are day trading, I think the opening range breakout strategy is one interesting strategy in T-Mobile that you can take advantage of. And that's the 5-minute opening range breakout strategy. If we backtest this over the past 2 years inside of T-Mobile, and I'm going to go for a half range target and give it a wider stop of a full range stop, only focusing on the short side, you'll see that the strategy has had a positive win rate and a positive P&L. This is what we're looking for, and you can see that P&L graph tends to climb over time. So overall, it's a good backtest. It's a strategy which we can have some hope behind. If we, say, change this from a 5-minute to a 15-minute, you'll see that the metrics get a little bit worse. And if I go to a 30-minute, you'll see the same idea holds true. So the 5-minute opening range breakout is the one that stands out inside of T-Mobile. It backtests well over 2 years. It backtests well over 1 year. It backtests well over just the past 3 months. It seems to be the strategy that's been consistent over time for an early short side entry for the day. So that's how I would be looking at T-Mobile here. I have a reason to be bearish, which starts with that daily time frame. We also had the weekly time frame with the MACD loaded in there. We also can see the momentum cross has shifted earlier on in this year, and now we're just looking for the bearishness to kick in inside of T-Mobile. For puts, your risk is defined, and for the opening range breakout, your risk is also defined with that full range stop, and ideally, you're waiting for a pullback to enter this particular trade and skew that risk to reward in your side. I hope you found this video helpful. Take care, everyone. Good luck trading, and I'll see you in the next update.